All right, so welcome to the exchange. So, first and foremost, I'm not a financial advisor. I'm just here to give you my opinion on what I see in the stock markets. Looking to the left to see what has happened, then looking to the right to see what may happen. Do your own due diligence. Make sure you invest money in things you know about. If you don't know, invest in yourself and learn. That's the best way you can make money out here and have some security in these markets. So, let's look at what happens to stock markets so we can get a better idea and some security in exchange. Welcome to the Exchange Show.
All right, welcome back. Welcome back. This is a new show. And down goes Frazier. Down goes Frazier. People are upset about Apple going down. Here's the thing. There's either going to be two camps in this. One is going to say, oh my God, I'm losing money. Another is going to say, oh my God, I'm about to get a great entry. So, what's going on? Essentially, let's take the bigger look at this. First and foremost, earnings from the previous quarter were above it. So now we need to talk about earnings from this quarter. All right. Here's our earnings right here from the previous. Did we beat that area? We did beat that area. So I had to take it to here. And there we go. So this is our earnings lever area. The reason I do this is because I want to make sure if I do a play during this time period, it's either going to beat the earnings, meaning go way above it, or it's going to go below it. Apple usually does really good on earnings. So you have just been caught in what I like to say the rug pull. You got pulled out right from under you. You went up, people like, oh my God, I'm at the top of the market, I'm going to buy. And then they said, yeah, great job. Hold this bag. And then they sold everything off. This could be one of two things. One, did I just get stuck holding the bag? And there's no way for me after I entered here to get my money back. So I need to sell. And you became liquidity for the people in the market selling their Apple stock and their options. Second, are you the person saying, oh man, at 235, this is looking sexy. 236 is still looking good. I've been waiting to get into Apple. Here's the thing. Currently, we broke a trend line. We broke out of it a while ago here on the 27th. So the trend line that is not drawn here is this. So the reason that's an important trend line as well. So you notice I have an inner, I have an outer, and then I have this trend line as well. So this was our good push up. We started this back here in November of last year. This great push up. Okay, so all we did was take away what we just gained in that last push up. Essentially, we're trying to get back up here. So as we gained in our price, we were all happy. Then price broke and was confirmed here on December 31st, the last day of last year. So if you were buying Apple here, you were like, oh my God, I'm stuck holding a bag again. It's at 256. Price came all the way down, just straight down. We broke that trend on January 27th. And hey, looks great. Maybe we can get back to this outer trend line. If you were only saying, I want to get to this outer trend line and then sell, you're a happy camper. But that's usually how bigger money may see this because they're going to start seeing retail people get in and be like, okay, they're starting to buy. We need somebody to hold the bag when we sell. Okay. So we have our new earnings area that we're going to look at. And we got to make sure we can. There. Let's take it over to here until I get to next earnings. There we go. So we have earnings again in April. So what we're going to do is we're going to look at this price action. Is it going to go down here to about 250 or 225 and then most likely go back up? Because remember, a lot of Apple's money isn't their actual product, it's their services. So if their services are doing well, the company's most likely going to do well too. But I want you to remember something. Even though you have this big red candle, it's still holding around this area, around 235. So what you really want to see is that over the next couple of weeks, are we going to be able to break not even 235? And the reason I'm saying that is right here, 229. Can it Is it going to break 229? And the reason I'm saying that, that's a good area of support. Okay. So the reason it's a good area of support, we had a rejection off there, another slight rejection off there, then we gap down. After that gap down, now we have this, which it tried to break. It became resistance. Now we coming back down. It didn't break this area. It took off from this area. So 229 around the 230 area. If it stays above there, you maybe have a good run until our next earnings. But a lot of times what will happen, you'll break down below earnings for a little bit, and then it may start building back up. So if Apple's leading the market, we're kind of in a I don't know area. So the next one, which can lead the market this week, and I'm not going to really talk about a lot of smaller stocks this week. I'm talking about the bigger ones. Oh, before I change over to Amazon, technically I'm in a buy. I'm in a buy, but I'm going based off technical analysis as well. Here I hit a trend line and I got big rejection, a big sell candle. Another thing that I'm looking at is this could be considered a very good buy because we came down here to the 200-day moving average. This 200-day moving average is a great place to buy stocks. If you haven't known that or you didn't know that, if you're below the 200 and it's a good stock, look at buying it. All right. A lot of times you're not going to lose money. Now, will it stay in that area for a while? Yeah. You may not gain a lot of money, but in the long run, remember this, buying stocks is a long run thing if you're doing investing. If you're trading, you want it to happen quick. Currently, I'm getting some movement in the right direction for my smaller moving averages, my 9 of 14, but it has to be above this 50 as well, my 48. I use a 48 moving average for my bigger one. So if it goes above here and stays green, I use a 3 stoplight thing. So this moving average will turn green if it goes above it and stays. My 14 is already green. My regime down here at the bottom for my RSI is already green. If I get a green here, hey, it's off to the races. But let's look at Amazon. So on Amazon, they're like, there was a problem in the market, never heard of it. Now, the reason that Amazon don't care is because Amazon does everything else. You got big government contracts. You got big money going into Amazon. Amazon's doing medical, it's doing books, it's doing cars now. And if you didn't notice, Amazon's owner was at the inauguration. So we had a lot of news this week. Now, Amazon could have took off more, and it looks like it still wants to go up. It broke this 230. That 230 was broken back here on the 21st of January. That was a great thing because it was one of the last areas. Now, even if you move it up here to our last high, this 233, that still was broken on January 22nd. We came up, came down. Now we have information to do a trend line. We may go across for a while and go up, or we may go across for a while and break down. So if it breaks this 233.07 to the downside with good volume, meaning you see a strong red volume candle at the point it breaks here. So if it breaks this trend line at this point with strong red volume, you're probably going to look for a downside for Amazon. So let's see what the algorithm says. Looks like the top of the market at this point is 244. This is most likely going to be changing because it's at the end of the range. And I do have a three-way go. All right. My moving average is green. I'm at the trend on the 9 moving average. My regime is green down here. RSI say you got room to the top side. Amazon's like, I don't see a problem with the market. Let's keep going. So you got Apple's like, I don't know. Maybe I'll go up. Maybe I just give you an opportunity to get in and buy. Amazon's like, there's a problem. Never heard of it. But the issue here is this. On our last strongest candle of volume, that was here. And that was on the 27th. It had a lot of volume. Very beautiful candle that I told you was going to keep going bullish. You may have an entry here at that 237, but you want to make sure you have a continuation at this point because you got a lot of chop right here. So that chop is not where you want to trade. Okay. Never trade the chop. It sucks. It sucks up all your money. Stay out of it. So until the price action comes out of this box, I'm not looking at it. And that's why I kind of gray it out because I'll look at it and be like, oh, I could trade that and lose money. No, I'm leaving it big. So let's go to Google. Google is telling us Turn that off. This was in chop. Okay, I didn't trade any of this. Um, Also, there's a gap down here at the 181 range down to about the 176 range. And this is, it's not super concerning because you've had times where it took years for gaps to close. Like there's a big gap in Apple really far back, around like the 160 area, I want to say. I'll check it in a second. But yeah, but let's do our earnings here first. So, earnings for Google previously was here. And some people are saying, why do you do earnings? Well, if you stay above your earnings for a lot of the time, say you get one of these, it comes down, this is an area you could enter. When you see it pop down below and then go back up. Great entry right here. You would have got, let's see. So you got on that candle. Say you've been holding it the whole time and you're still currently in it. That's $32 per share you would have earned, or 19%. So that's a great push. It's a great entry point. Currently, let's see, our earnings have not happened yet. They're coming out on the 4th of February. So in 2 days this week. So that's going to be Monday, Tuesday, Google earnings. Now we pushed up here. Based on news, I'm not playing Jack this week, to be honest with you, only because there's too much happening. Too many tariffs, too many newses, too many I don't knows, and too many big you need to give me something that I know that I can say, oh, market's going to go down, market's going to go up. I have a very good idea of what it may do. But let's see what the algorithm says. It says go for it. Buy, buy, buy. I got a 3-ray green. I got a tie up here. This actually looks like a really good buy signal, but technically doesn't always agree with fundamentally. So fundamentally, I still got to wait for news because I don't know what's going to happen. This could be ruined by a damn tweet. I can get a tweet on the hour before earnings and be like, I'm buying in, getting some options, getting some shares. Oh, to the moon, whatever, diamond hands. And then I got to sell all because somebody said that Google spied on their dog taking a dump in the bathroom or something. I don't know. But at the same time, I really want to buy this. I really want to buy Google, or at least do an option or two on it. Currently, being patient. It's hard to be patient because I really want to do an option on it. So let's see some of the indicators. Why am I thinking these things? So first and foremost, you got to talk about the VIX. So the VIX is here, and I usually try not to use this on here. I just have areas marked out. Some of the bigger areas have already been hit. There's 21. I actually have to put another one up here. Um, Actually, 27. Yeah, I got to do one there. And this one is gold because of there. So currently, we're on a slight uptrend. Okay, we had the VIX down here in the 12s for a while. All right, then it went to the 15s. After it hit the 15s, it took off. So if you don't know what the VIX is, it's the volatility in the market. When the VIX goes high, that means stocks are going to start selling off and go low. If the VIX is low, that means that stocks are going to go high because not a lot of volatility. It's just business as usual. Currently, the the VIX is at 16. That's not horrible at all. It's actually very nice. And if you notice, going back, the VIX can hang around 16 for a while. We really want to see it below 15. The VIX below 15 is where we want to be. And you might say, why? Well, if it's down in this area, generally we are guaranteed areas and times where we can pretty much be assured that most stocks are going to continue up. When you get the VIX up here, if you never noticed this, the VIX shot up, and you know when, we all know when, 85. 2020, March. Okay. When that happened, that's a market collapse pretty much. The last time we shot up that high, it was 65, and that was in August of 24. We had a big sell then too. So at least in your time frame, you may have been trading. Look at the VIX. On those days when you saw a really big drawdown or really big red days, see what the VIX was. I always keep it up here just to keep my eye on something. Now, one of the other ones that I use a lot is this next one, and it's the stocks above the 50-day moving average in the S&P. Now, I had divergence in this one on a daily. The reason I mark this out the way I do is because when it gets down here in the fives or the sixes down here in this area, man, you could pretty much be assumed that the SPY or SPX is most likely going to shoot up, or it's going to consolidate here for a while, but it's most likely, I mean, it's very strong, very strongly, probably going to move up to the upside. Um, this doesn't make me very uh, confident. And the reason I'm saying that is because in this area, we're at the 50 in the middle. In the middle, no, I'm looking for 92. I'm looking for at least get me above the 70s. Hey, get me above the 60s. Not, no, no, not in the middle, not at 50. And it's been trying. It's been trying to get out. And it's been no every time. It gets to about 60 something, like right below 59 and change. And it just says, nah, I'm cool. I want to stay in the middle. Now, I'm just going to go based off of the RSI down here. This was my low. I showed divergence. It shot up to the 50 down here from the 19s. Great. Now it's a decision of what's going to happen. If you notice, the market's waiting for confirmation. What's going to happen with this economic season that we are in right now? And too many questions are out there without answers. Are we doing tariffs? And if we are, is another country going to accept them? Well, they said no, they're going to add tariffs on us. Look, you got a lot, too much uncertainties in the market at this time. And that is not good for the market. If you're like, I'm running over to Bitcoin, well, hold on, player, because Bitcoin right now is down. It's down to 99,000 currently. This is on 2/2/25, and this is on a Sunday morning around 10:50 in the morning. It's going down. You've had a double top, one, two, say three, but we've been getting rejected off at 106 mark. This is either an opportunity for you. If you look, it's starting to curl over down here and go bad. Well, not bad, but we're currently at a 48-day moving average rejecting. Here's the other thing: people are waiting. Remember, a lot of big money came into Bitcoin, especially when it hit over 100,000. So they're waiting to see if their investment in this cryptocurrency is going to be worth it. Is it? We don't know, because if this goes down, confirmed under 98, $98,936.20, I'm going to say, yeah, we might want to look to buy this at a lower place, maybe around 89,000. If it goes past there, maybe around 86,000. If it goes past there, maybe around 80,000, maybe even around 92. So take your time. I hope your portfolios turn green. But at this moment, I'm gonna tell you this: I'm looking at Bitcoin at 99,000, and tell me if you see this as well. Now, some of you can say, I see a W. That's awesome. I'm glad you see that W. But at the same time, that W looks like it has run its course. Some people may say, I see an M. Now, if it's an M, where's the next move? Down here at 89, down here at 86, down here at 80. Now, worst case scenario, I say here. And you may say, why? Look over here. So we have two things. You got two institutional candles. All right. So you have this candle here, and then you have this candle here. You may say, what's the importance of this candle? These are institutional candles, or just say big money candles. These big money candles need to be broken up. Usually, the reason they need to be broken up is because it's too much weight on top of them. Think of it as a house of cards. You get giant candles like that, there's most likely orders or buyers who were still waiting to buy at this point, and their orders were never filled. Somebody's got to give them a chance to get their orders filled. So it's probably going to be their friends. So that's what we got this week on the exchange. I hope it was helpful. If so, give it a like button, and we will talk to you next week.